If the Chinese produce goods that the world wants to buy, and they say that you need to pay yuan for these goods, not dollars, to the extent that people want those products, they're going to need yuan to pay for
I
them.
think we may have empty Walmarts and Kmarts, but I don't think we would have empty supermarkets. And that is what China would have if this happened.
Everybody has just been conditioned to think that, well, the Fed can fix every problem. We'll just print some money, right? I mean, everybody looks to government. Look at the State of the Union address that we just had. It's all about all this great stuff.
China has easy money policies right now. They're keeping interest rates low to prop up the banks. I get your point, Peter. I get your point.
Hi guys, welcome. My name is Liam Cosgrove. I'm a reporter with the Epoch Times, and today I'm joined by Peter Schiff, founder of Euro-Pacific Asset Management, and Brent Johnson, founder of Santiago Capital. So in light of rising tensions over Taiwan and speculation that China might invade, many have been asking questions as to what the U.S. response might be to an invasion. Would we use military? Would we stick to economic means like sanctions, as we did with Russia? And we'll be discussing a scenario of who would win in an economic war, the US or China. Peter will be taking the position that China comes out on top of that situation, and Brent will be arguing that the US actually has the upper hand. Welcome to both of you guys. Thanks for joining us.
Sure, thank you.
Thanks for having me. I think this will be a fun conversation.
Okay, so let's start off with opening statements, kind of opening arguments. Peter, let's begin with you. Why is it that you think the US would lose an economic war with China?
Well, I don't think we have the military, the artillery to actually fight a war with China, because China is our biggest supplier of goods and our biggest lender. I mean, sometimes it's Japan. I mean, China and Japan kind of take turns for America's biggest creditor, but certainly our trade deficit is larger with China than it is with any other nation. And so America is more dependent on goods flowing in from China than it is from any other nation. And we don't have the ability to pay for those goods. We don't export goods to China to cover the cost of those imports. We rely on the Chinese willingness to accept our dollars that we just create out of thin air. They don't cost us any money to create, and we don't even have to print them anymore. So we don't have to spend the money on the paper or the ink. It's just a digital, electronic entry. So we create that, and the Chinese supply us with all sorts of goods that we don't have the factories, the infrastructure, the trained workforce to produce ourselves. So we've got the Chinese doing all this work for us. And so I think if we ever really went to war, if China basically decided, okay, we're just going to cut America off, we're not going to be shipping merchandise to the United States, nor are we going to be lending money to Americans. We're not going to buy any treasuries. We're not going to buy any mortgage-backed securities or any other dollar-denominated debt. And as a matter of fact, we're going to start selling the debt that we already hold to the extent that it matures. We're not going to roll it over, and we're just going to unload our dollars, and we're just going to buy gold instead. And I think that would create a massive pandemonium here in the United States. There'd be a complete implosion. And then the question would be, how would the authorities handle that? Because the only viable solution to that catastrophe would be massive cuts in government spending, dramatic repeal of all sorts of rules and regulations, so that we could try to rebuild a legitimate economy. Because the one we have right now is completely phony. It's a bubble that depends on countries like China supplying us with goods that we don't make and loaning us the money to buy them. And so if all of a sudden, we have to, become self-sufficient, that's not going to happen with our current tax and regulatory environment. You're going to have to see major reforms. But politically, that's not how the pendulum is swinging. Everybody wants bigger government, more government programs, more government spending. And so if we tried that in the aftermath of, that type of economic war, we would take a horrible situation and just make it much worse.
Okay. Thank you for that, Peter. Brent, if you want to either respond to what Peter said or just kind of give your overview of why you think the U.S. has the upper hand.
Sure. I have to say off the top, I had to laugh a little bit when Peter was taking the side of China, because I think he's probably the best person at describing free market economics, but he's taking the side of a centrally planned economy, which is, I think the irony there is a little too good not to mention. But essentially, what I would say in addition to that is that I don't think anybody wins the war. I think everybody gets hurt. I think to argue otherwise is a little disingenuous. That said, we're talking about a relative victory here, not an absolute victory. And even that itself is kind of a relative term. So it's hard to envision a war with China where things come out positive for anybody. That said, if it comes down to war and we've totally cut off from China, or they've totally cut us off, however you want to describe that, it's bad for the U.S. And while the U.S. is not currently self-sufficient, the United States is positioned to be more self-sufficient than any other country in the world. We have the best portfolio of real assets. We have the best farmland in the world. We have an ocean on 4 sides. We've got the Arctic Ocean, the Atlantic Ocean, the Pacific Ocean. I don't know, maybe you don't consider the Gulf of Mexico, and maybe that's just part of the Atlantic. And if China were to shut us off, then they're shutting Europe off as well, because Europe is allied with the US. So they've just cut off their 2 biggest clients. I think it goes back and forth on whether they export the most to the United States or whether they export the most to Europe. So if they've lost their 2 biggest clients, now they've got to start selling internally, and they just do not yet have the economic capacity to place all those goods internally. I mean, you could argue Say's law, production equals demand, and that may be true, but not at current prices. And then finally, if China is cutting off the United States, then they're cutting off their US dollar funding needs. And believe it or not, China currently has very large US dollar funding needs. They have big exposures to US dollar debt, and they have big exposure to needed inputs, commodities to run their economy that are traded in dollars. So I think, were this to happen on a relative basis, I think the US comes out ahead.
Okay, interesting. Peter, how do you respond to that Brent says the US is potentially in the best position in the world to be self-sufficient with our farmland, with our protective oceans?
Sure, a couple of points. I recognize that you don't have a pure free market in China. I mean, not even close, but you don't have one in the United States either. I mean, our economy is pretty much centrally planned to a large degree as well. I mean, what do you call the Federal Reserve? You have a group of central planners that have been price fixing interest rates, and it's done tremendous damage to the structure of our economy. That's one of the reasons that we depend so much on the rest of the world, because we don't save enough, we don't produce enough, and we rely on countries like China to do the production and the savings for us. And I do think that the idea that, if China were to lose America as a customer, I think that's actually a plus for China, because we're not a paying customer. They have to vendor finance us. I don't think the Chinese are benefiting by exchanging goods for paper. I think that the Chinese people would be much better off if they got to consume all the stuff that they're working hard to produce. And you're correct, at current prices, they can't afford it. But you adjust the exchange rates, the dollar crashes, which it would, I think, in this type of economic situation, and the Chinese currency goes up. Well, now, of course, the Chinese can afford to produce the products. Because you're right, it's supply that creates its own demand. If you've got a situation where the Chinese have all this merchandise, that's not a problem. The problem is America with no merchandise and just a bunch of paper. Now, I agree with Brent that we have tremendous potential. We have lots of natural resources. We have lots of infrastructure. But how do we unlock that potential? I mean, right now, you talk about all these oceans. We have a huge trade deficit in fish. Why can't Americans catch fish? Why do we have to get fish from the rest of the world? But you need fishermen. Somebody has to go out there and know what they're doing. You have to have the equipment. We've been eating foreign fish for so long, we forgot how to catch them. That's the problem. The longer America stays dependent on the rest of the world, the more screwed up the economy gets. And we've enjoyed this privilege of issuing the world's reserve currency for a long time. And yes, it's given us this advantage. We have a standard of living that's much higher than what we're entitled to based on our productivity. But the longer we can get away with it, the worse it's going to be when the tables are turned, because the rest of the world does not benefit from this relationship. It's not symbiotic. It's more parasitic. I mean, the world has to pay the cost to underwrite American profligacy. And the longer they let us get away with it, the more expensive it becomes. And obviously, it has to end at some point. President Lincoln said you could fool some of the people all the time and all the people some of the time, but you can't fool all the people all the time. I mean, eventually the world's going to wake up, and this is going to come to an end. And so I think that, you know, the war is winnable, because I think that the Chinese and other countries, you know, they're losing right now by maintaining this relationship. And I think that's why they are currently looking for alternatives. I mean, yes, the Chinese right now, their economy does depend on a lot of things in dollars, and they don't like that. And they are trying to wean themselves away from that so they can pull the plug. And even if they stop trading with Europe, and I know they do export a lot from Europe, and they also import from Europe. They don't have the huge imbalance with Europe that they have with the United States. Because, you know, Europe as a community has relatively balanced trade. But, you know, they could trade with India, they could trade with all sorts of other countries that aren't in Europe or the United States. They could trade with South America. But again, they've got a huge market of people. The whole purpose of trade, the only reason you export is to import. That's basically it, because it's comparative advantage. If the Americans make something more efficiently than the Chinese, it's better for the Chinese to make something else and then trade, rather than make something themselves that could be imported for an expenditure of less resources. But if you're just exporting for just to get paper money, you're not accomplishing anything. And so they don't need to export to the United States if it's not to facilitate the payment of imports, and so they'll just consume what they produce. But just imagine life in America. You go into a Walmart and the shelves are empty. I mean, we saw a little bit of that during COVID, but it could get a lot worse.
Brent, what do you think about that? So I guess the argument is China could pivot, it could consume its own goods, or it could trade with a different trading partner if they would accept Chinese currency. Whereas the US might literally have empty supermarkets. What do you say to that?
Well, I think I'd make a distinguishment here. I think we may have empty Walmarts and Kmarts, but I don't think we would have empty supermarkets. And that is what China would have if this happened. Because, a lot of it gets talked about how the US is dependent on the rest of the world to send us our goods. But in that case, we're talking about high-end watches, we're talking about computers, we're talking about clothing, shoes. We're not talking about wheat, we're not talking about corn, we're not talking about beef or chicken. We're not talking about oil. But that's what China needs from the rest of the world. China needs energy, both oil and natural gas, and they need food from the rest of the world. So again, if we're talking about everybody getting hurt and our Kmarts and Walmarts are empty, I think that's relatively better off than my supermarket being empty. Because when you don't have a TV, you're annoyed. When you don't have food, you're mad. And when you don't have TV, you're probably not going to start a revolution. But if you don't have food or heat, you might start a revolution.
It's not like they don't have any farms in China, but I agree. The Chinese import a lot of raw materials, but they can import from Brazil. They can get stuff from Africa. I mean,
but if that happens, I hear what you're saying. But if that happens, if we are literally we are not going to get to the situation where there is no trade between the United States and China without it being a war, an actual war. I cannot foresee a situation where we just don't trade with that half of the world and everything is fine from a military perspective. I believe that would actually, unfortunately, cause an actual war. And in that scenario, the ships are not sailing from Brazil to China without being intercepted or blockaded or in some form. And I'm not sure that in that scenario that Brazil would actually continue to sell to China. They may want to, but that means that they're now choosing China over the United States. And while that's kind of a popular theory, in reality, I think it would be much different.
Well, it's not so much a choice of the government. I mean, if people want Chinese products, how do they get them? Well, they have to export something. They export food, and they can import these products. But I agree with you. We're not likely to get to a situation where this happens by government decree. But I do think that ultimately, over time, the dollar is going to lose this reserve status, and then trade with China is going to collapse on its own, because the dollar is going to collapse and Americans aren't going to be able to afford all of these Chinese products. So the Chinese will either trade with other people who can afford to pay for their products with other products, or the Chinese people will just start consuming a lot more on their own, which is going to be great for them. They'll have higher standards of living.
No, I would just say that this idea that the U.S. is going to go in some kind of a, I don't know, recession or a self-imposed dystopian society because we're not trading with the rest of the world, and all of a sudden the rest of the world is going to start trading with each other and everything's going to be fine, I think is completely wrong. If you look over the last 25 years, there's never been a time where the U.S. went into a downturn or a recession and the rest of the world thrived. In fact, the rest of the world typically follows the U.S. down when that happens. That's the first thing. The second thing is, I don't think it's a given, and in fact, I would argue strongly the other way, that if we cut each other off, that it's the Chinese yuan that appreciates versus the U.S. dollar. There is very little, next to zero, demand for yuan outside of China. There is incredible demand for dollars outside the United States. And if everybody starts defaulting on their dollar debts and using the dollar outside the United States, that's actually hurting the rest of the world, because the rest of the world holds a significant amount of their reserves in US dollars and in US dollar liabilities. And so if all of a sudden those gets defaulted on, yeah, the demand for the dollar falls, but the supply of the dollar falls even more.
But if the Chinese produce goods that the world wants to buy, and they say that you need to pay yuan for these goods, not dollars, to the extent that people want those products, they're going to need yuan to pay for them. I mean, that's where the demand comes from. It's the productive capacity of the nation. And if you need that currency because you need their products, well, then you need the currency. I mean, right now, the main demand for the dollar is not for our products, not that we don't have any products, but our biggest product is our debt. And so people want dollars to buy treasuries. God knows why, but that's what they do. That's what they do with them. Or they buy, other financial assets, or maybe they buy U.S. stocks.
Or they service their U.S. dollar debt. That's the biggest driver.
Yeah, although one day their U.S. dollar debt is just going to be repudiated, with inflation. So that's the least of their worries long term, because the U.S. government is the biggest U.S. dollar debtor. We got a $31.5 trillion debt, and it's unpayable. And so the only viable political way forward is to inflate that debt away. Well, when the U.S. government inflates its debt away, it inflates away everybody's debt.
How does China inflate away their 300% total debt to GDP? How do they get out from underneath that big debt burden?
Well, it's not. You're talking about all the debt. Because it's not.
If you look at all the assets in the banking system compared to their GDP,
but you're not talking about. That's not government debt. You're talking about
no, but that's corporate debt. But isn't corporate debt?
I'm not talking about our corporate debt. We got corporate debt. We got municipal debt. We got tons of debt. We got we got more debt than anybody. But obviously, look, the Chinese economy has some problems, and there's going to be defaults. There's going to be bankruptcies. I mean, the whole world's kind of screwed up because it's been on this U.S. dollar reserve system. We haven't had real money since 1971. So we got 50 years of funny money and central planning when it comes to interest rates. And so the whole world is screwed up. I'm not saying that it's paradise over there in China, but I'm just talking about, on a relative basis, which country is the most screwed up. And I would say that our economy is more screwed up because we have been the primary beneficiary of this monetary system. And so our economy has evolved with that crutch, with the crutch of not having to produce, not having to save. And so it's not going to, we're not gonna be able to turn on a light switch and reprogram everybody in America and give them the bad news that, hey, it's time to go back to work. Everybody has just been conditioned to think that, well, the Fed can fix every problem. We'll just print some money, right? I mean, everybody looks to government. Look at the State of the Union address that we just had. It's all about all this great stuff that the government's going to do. Nobody talks about capitalism or freedom. Everybody expects the government to hand them everything on a silver platter. Well, so far, the government's been handing them the stuff that the Chinese have been putting on that platter. When the platter's empty, I mean, it's going to be a rude awakening.
Well, I listen, I agree with that. The whole world is in for a rude awakening.
Peter, what do you say to Brent's point about, the U.S. is a net exporter of food, net exporter of natural gas. So aren't those big advantages for us?
Yeah, look, it's a good thing that we're blessed with natural resources. Imagine if we were like Japan or something. I mean, we couldn't even survive if we were in their situation. So it's a good thing we've got those things. But, I think if you actually think about it and you look at the relationship that America has with China, and you just, look at what we sell them and what they sell us, and if you didn't know anything, if you were just like on another planet and you said, hey, here's these two countries, one of them grows shit and takes stuff out of the ground, raw materials, and sends it to this other country, which sends back all these manufactured finished goods and stuff like that. I mean, China would look like the real economic power. We're like, a little colony of China. I mean, we're sending them stuff that grows, and they're making all the stuff that, where you need factories. So they've got all the economic industrial might. All we got is a bunch of farmers. Not to belittle them, but that's just harvesting, what we've got from God. I mean, we don't have the industrial might that we once had, because you look at what America's exports were 50, 60, 70 years ago. We were exporting manufactured goods. That dwarfed our agriculture. That's what we were giving everybody. Automobiles, refrigerators, washer dryers, television sets, cameras, all the stuff, all the quality stuff was all made here. Nobody would buy anything made in Japan, right? It was a joke. So it just shows you how much everything has switched when you just look at the terms of trade and what we produce and sell and what we have to import.
Brent, one question I have for you is Peter's point about, if we did cut them off, China could go to buy things from Brazil, different countries. Why would that be so hard? I guess you think the U.S. would use military to prevent that from happening?
Well, I think they would use all means necessary to prevent that from happening. Now, would they start off right away with military? Probably not, but they could very easily say to Brazil, hey, whose side are you on? Are you on China's side or are you on our side? China's halfway around the world. We're just north of you. We do a lot of trade with you as well. You're either with us or against us. Now, I'm not saying that's the right thing to do. I'm just saying that's what they would do. It's, it's kind of what I would like to see versus reality.
More likely, they're going to say, our missiles are a lot closer to you than their missiles. So
hey, you know what? That's very possible as well. That's very possible as well. And so this idea that the rest of the world will just start trading with China and push the United States to the side, I think history says otherwise. To just look at what's happened in the last year, year and a half. Europe is in the process of being deindustrialized. They didn't go with Russia on the natural gas. They continued to side with the United States. And so there's private equity firms right now, US and North American private equity firms over in Europe right now buying up, energy assets at 20 cents on the dollar because, industries leaving Germany. German auto manufacturing they've made decisions to move some of their more of their production, not all of it, more of their production to Alabama. So you have these situations where, despite the pain that it's causing them, Europe so far is still choosing to side with the United States. Now, it's not pretty and it's not fun, and doesn't mean that it's going to work out great for anybody. But I don't see the Germans rushing off to Beijing to side with them rather than Washington.
Yeah,
right.
Again, Washington's influence is going to fade. As we get deeper and deeper into debt. Our influence and eventually our military. Look, I mean, you remember the Soviet Union. I mean, think about the power that everybody assumed the Soviet Union had during the 1960s and the 1970s. I mean, they disappeared almost overnight, in the late 80s when the whole thing fell apart. But leading up to it, I mean, the Soviet Union was this gigantic superpower, and then it was nothing. So
I would argue that's China today.
Well, no.
You just did a very good job of explaining China. Thank you for my argument.
We didn't buy anything from the Soviet Union. They didn't make shit. They couldn't even feed themselves. We had to loan them money to buy our wheat. We didn't have a trade deficit with the Soviet Union. They didn't make anything. I mean, the only thing they make.
You know who we did? You know who we did have a trade deficit with? You know who we did have a trade deficit with?
Who?
And there's a lot of parallels with Japan. Japan was a manufacturing power. They had and they had a huge real estate boom, and they were the up and coming.
We still have a deficit with Japan. But yes, the mistake that Japan made first of all, the mistake that they made during the 80s was not allowing the yen to appreciate more. They began to get concerned about the weakness of the US dollar, and so they printed too much money and they kept interest rates too low, and that really fueled the bubble in stocks and real estate. And then when it burst, instead of allowing the free market to purge the economy of all the zombie companies and reallocate resources and do the right thing, they constantly intervened, and the politicians were under pressure to do things, and all they did was harm. And of course, they continued to have this foolish policy of creating inflation. We need more inflation. We need low interest rates. And it was compounded by the fact that the US, we brought our interest rates down to zero. And so then they're like, screw, how do we get under zero? We got to go negative. I mean, they should have just allowed their economy to restructure and allowed the dollar to collapse against the yen. They should have let the yen go up. They should have allowed everything. And now, the Japanese government has a ton of debt. They borrowed all that money to prop up the U.S. economy, because they thought that somehow it would benefit their own economy.
But this is what China's doing right now? China has easy money. China has easy money policies right now. They're keeping interest rates low to prop up the banks. They've got all these cost holdings.
We agree.
So China's doing exactly what Japan did.
We have screwed up everybody. Everybody's economy is screwed up because we are the reserve currency, and we are basically, calling the tune, and everybody is dancing. But when you look beneath the surface, what countries have the productive capacity? That's the key. That's where wealth comes from. Who has the factories? Who has the infrastructure, the supply chains to produce the stuff that people want? It's not the United States. China has that a lot more than we do.
But they don't have the inputs. They have the capacity, but they don't have the inputs.
Raw materials are easy to source. And they're doing it. They're getting deals all over.
They're easy to source. They're easy to source right now, but in a scenario of war, they are not easy to source. And I think you would agree that war is inflationary for everybody.
Well, war itself isn't inflationary. It's the money they print to pay for the wars. That's inflationary.
There's no supply chain issues during war?
Well, but then they should, if money supply went down, then, the prices wouldn't go up. You just have shortages, So right now, money supply in the United States is falling and money supply in China is growing. So is that in favor of the United States or China? Well, money supply is falling temporarily in the United States because it rose so massively, in the last several years, but that won't last. Money supply is going to go up as soon as the Fed goes right back to QE, which it's going to be doing. But credit is growing. I don't know, you're looking at money supply, but inflation is also, this expansion of credit, and credit is still available. I mean, people are borrowing like crazy. Now some of these companies, look, a firm came out, one of these big buy now and pay later places, maybe they're finding out it's buy now and pay never, because the stock cratered, because people aren't, paying back the money they owe. But people have been able to access credit. I mean, credit card debt is still at a record low high. Savings are basically a record low. And so this is also fueling, prices, because people are able to borrow to buy stuff. So that's kind of replacing some of the decline in money supply, which won't last. The official money supply, they're going to turn those spigots on at the first sign of trouble.
Let me jump in here, Brent. So is your long-term view different than your short-term view? So like what Peter says about, at the end of the day, people are buying most items from China. The dollar is currently the global reserve, but does there come a day when people, if China used that leverage and said no more stuff unless you use yuan, could they eventually upset our global reserve status?
So I think that our global reserve status will change. I think there will be a transition period. The US dollar will not stay the global reserve currency forever. I don't think it will be due to anything that China does. I think it will be more due to just the general, as Peter has very eloquently said, the amount of debt and the amount of the way this whole system is screwed up, I think will necessitate a change in the system and a transition to the system. And on the other side of that transition, the dollar probably falls in value, loses its status. I think that could take a lot longer than most other people, but I do think that will eventually happen. But what I don't think will happen is I do not think that there will be a transition and we end up with another system where in that transition period, the dollar does not go higher. I don't think that we can go to a new system where the dollar is no longer the global reserve currency, where in that interim, the dollar did not go dramatically higher.
That's a key point of disagreement because I don't think the dollar loses its status because of its strength. I think it's the weakness of the dollar that ultimately undoes its status. I mean, as long as the dollar is sound, I think it can continue. I think what happens with all the debt is the world recognizes that it's unpayable and that the United States is insolvent. You know, we keep reminding the world that we're insolvent every time we go through one of these, charades with the debt ceiling. What does the Secretary of the Treasury, what does the Federal Reserve Chairman, what does the President say is going to happen if we don't raise the debt? They say, well, we're going to default. If we don't raise the debt, we default on U.S. Treasuries. So that's an admission that we're running this gigantic Ponzi scheme and that default is eventually inevitable, because nobody is saying, well, if we can't raise the debt ceiling, we're going to cut Social Security. We're going to cut Medicare. We're going to raise taxes because we're going to pay our bills. We're going to pay the interest on the debt. We're going to pay the principal. No, they're saying if we can't borrow more money from the rest of the world, well, then we're not going to pay back any of the money that we've already borrowed. So it's like we're running a Ponzi scheme. And so if the world eventually says, we don't want to participate in a Ponzi scheme anymore because we know how Ponzi schemes end, then there's a run on the dollar. There's a run on treasuries, because the one ceiling, let me finish this one point. The one ceiling that we can't raise is the lending ceiling. See, the debt ceiling is self-imposed. We can keep raising it because that's how much money we want to borrow. But the ceiling that we can't raise is how much money the world wants to lend. And when America's creditors are no mas, we don't want to loan you any more money because you can't possibly pay us back the money we've already loaned you. We're done throwing good money after bad. That's when everything collapses. And that's with dollar weakness, not strength.
So I would concede Peter's point. This someday will happen. But the point I would very much like to make is that everything that Peter is talking about happening to the dollar one day in the future is already happening right now today in Japan and Europe. Nobody, when there's a Japanese government bond auction, the Japanese or the BOJ is the biggest buyer. No foreigners are running over there and buying, trillions of dollars worth of Japanese government bonds. The ECB is currently monetizing almost all of the debt of the periphery countries. Even though they're raising rates, they're doing QE at the same time. Meanwhile, over the last month, every time the Treasury has had Treasury auctions, there has been record number of foreigners, indirect bidders, showing up to buy the Treasuries. So the point Peter makes is good. There will come a point where this happens, and that's why I think eventually, the dollar, days will be numbered. But all of the worries that people associate with the dollar are already happening right now today to its competitor currencies. And so on a relative basis, I think the US and the US dollar are actually sitting in pretty good position.
Well, I think we're only in a good position because of the perception and the dollar's role as the reserve currency. It's like whenever there's a problem in the world, people buy dollars, even if that problem is in the United States. And I think that the best example of the absurdity of this, if you recall, the only time that a rating agency downgraded U.S. Treasury debt, you had Standard & Poor's, and they went from AAA or wherever it was to AA or whatever they did. And the stock market didn't like that. But when that happened, there was this so-called flight to quality, and people bought U.S. Treasuries on the downgrade of U.S. Treasuries. So, I mean, how can that be? That doesn't make any sense. So that shows you that we even benefit from our own problems because it causes people to want to loan us even more money so we can make those problems even worse. See, this system should have unraveled a long time ago. The fact that it hasn't means that the economy of the United States is just that much more screwed up than it was, years or decades past. And so you're right, eventually it ends, but the sooner the better from the perspective of the longer it takes, the worse it's going to be.
Well, so quick question then, how has it held on for so long? Is it, Brent, what do you think? Is it petrodollar?
I think it's a combination of things. One, we have the biggest, deepest capital market, so it has the best liquidity. Number two, we are most countries' biggest client. So if you're going to trade with us and you want access to our markets, then you need dollars and you need to be in the good graces of the United States. So that's part of it. The third part of it is because everybody trades with us, then they actually if they borrow in dollars, they get a lower rate. So countries have taken out a lot of US dollar debt. That kind of creates its own demand for the debt. And then finally, I think to the certain extent, the US, it would happen to a greater extent if necessary, the US military backs it up as well. So there's a number of factors that lead to the dollar lasting longer than many people think that it probably should. And one thing I would say again, I think Peter makes fantastic points with how the system is screwed up and how, it's all backwards and people think of it wrong. But for the rest of the world to, come to the realization that we are running a quote unquote Ponzi scheme and no longer want to deal with it and no longer want to do it, then they would also, because their systems run on the exact same scenario that ours run on, they would have to admit that their systems are Ponzi schemes as well. So, they would have to restructure their own economies as well and structure the design of their monetary system, and their own central bank would have to come up with a whole new way of doing things. So it's not as easy in a free market scenario. Maybe perhaps Peter's position is right, but I just don't see the world having this grand aha moment in a moment of clarity and moving on, and everything's all of a sudden, bad for the US and great for everybody else.
I mean, who knows? I mean, I'm not the only one that's been pointing this out, so it's not like, the world should know. I mean, just like I was warning about the housing bubble and the subprime problem, nobody paid attention to me, and then it happened. So there are people that are warning about this, and America has done an excellent job of basically getting the world to believe that it's dependent on the U.S. dollar, which we have a monopoly on the ability to create out of thin air. And seigniorage gains. I mean, we've taken that to the height of any country in the history of the world. But nothing that can't go on forever will, and it's going to end. Yeah, I mean, look, I've been saying it's going to end for 20 years. And here it is. We're still here. So is it possible that I could be saying this for another 20 years? Yeah, I mean, of course it's possible. But imagine where the national debt would be 20 years from now. I mean, at some point, this has got to end. It can't just, the numbers are just so big and it starts to become exponential. So just thinking, well, it can keep going on for a long time. You can think that way until all of a sudden it's a crisis. I mean, we're here in Puerto Rico, and I even remember before Puerto Rico had its sovereign debt crisis and they had a default, and we eventually restructured. I forget what we agreed to pay, but we can't even pay what we agreed to pay, which was maybe 20 cents on the dollar. But before Puerto Rico had its debt problem, it was already broke. It was obvious that Puerto Rico borrowed too much money, but no one cared. All these funds kept buying the muni bonds, and so as long as the mutual funds wanted these tax-free Puerto Rican bonds, the Puerto Rican government kept borrowing money and selling bonds, and no one gave a damn until all of a sudden people worried about it, and then it was a crisis, right? It's not a problem until people worry about it. And so right now, no one's worried about this giant Ponzi scheme or our unpayable debt or the prospect of hyperinflation, just like they weren't worried about Greece until all of a sudden they were worried about Greece, and you don't hear too much about it anymore. But it just comes out of the blue, like, oh, all of a sudden the bond market is finally awake and worried about an entity that's bankrupt. So it is going to happen, and it could be a long time from now, or it could be tomorrow. And since we don't know, I mean, that's just my thing. I don't know when it's going to happen. I know it's going to happen. I just don't know when. So I think the best thing is to just be prepared for it, so that when it does happen, you're ready. And even if it happens later, okay, I've been ready for a long time. I mean, people buy, insurance. They don't know when they're going to have an accident or when they're going to need it. They just want to make sure that they have it in case they need it. Because if you wait, that they won't sell you a fire insurance policy after your house burns down. You have to buy it before it's on fire.
Right. But Peter, isn't some of it more than just kind of belief? Like, when you have Saudi Arabia exclusively selling oil in dollars, that's more than just like faith in the dollar keeping it alive. That's, you have to transact in the dollar in some situations.
Look, that's not an accident either. I mean,
right.
We went off the gold standard. Nixon had to do something, and so we got the Saudis to participate. But will Saudi Arabia be selling its oil for dollars in 50 years? No. Will it be doing it in 10 years? Probably not. 5 years? We'll see. I mean, I clearly know that they don't want to. I mean, if I was Saudi Arabia, not that I have, any conversation with the Saudis, but if I was, in Saudi Arabia and I was taking a look at the situation today with Russia, and I would be like, I don't want that happening to me, and I would be doing everything I can to try to get out from under being dependent on the US dollar. You don't want to have that kind of weapon in the hands of a potential adversary. I mean, the Saudis could easily find themselves in the position that Russia's in, and they don't want to be. Nobody wants to be in that position. So, by weaponizing the dollar and the SWIFT system, all that, we've just created yet another reason for the world to want to get rid of it. So it's going to happen. And one other point I wanted to make too about the politics, before I forget, this maybe Brett could comment, but as far as China and the United States, the Chinese have a luxury that we don't have. See, the Chinese leaders don't have to get elected. They don't have to do stupid things to get elected. They can do the right thing and allow the bitter medicine to go down. But American politicians will never do the right thing because that means they're not going to get reelected. So the politics are a lot different here. There's so much pressure to do the wrong thing economically in the United States, and they won't have as much pressure in China.
Brent, let me get your opinion on what Peter said about Russia, and we took them off SWIFT, and that was yet another reason to leave the dollar. And if Saudi Arabia, how much importance do you place on the petrodollar? If Saudi Arabia starts selling in yuan or another currency, how big of a deal do you think that is?
Okay, so with regard to the U.S. weaponizing the dollar, taking people off SWIFT, sanctioning them, that's unfortunately that's what hegemons do. That's what people that run the world do. They're power hungry. They want to stay in power. They overplay their hand. They bully others, and I don't necessarily advocate for that, but I recognize that's the way it's done. One thing I would say, though, is before you start moralizing about the evils of the United States, all countries, all governments do this on a domestic basis to their own citizens. They tax their citizens, they throw them in jail. China recently confiscated all of Jack Ma's assets because they didn't like what he was doing. So, the idea that somehow our politicians are these evil beings and the rest of the world's politicians are these, very well-intentioned and nice people that would never ever confiscate anybody else.
It's not moralizing.
It's
not moralizing. He's more saying, in doing that, is it actually to our disadvantage? Because then Saudi Arabia sees what we did.
So in the long term, yes, and the more you bully somebody, eventually they are going to stand up to you. But the reason, this gets a little philosophical, but the reason that bullies exist is because it works. If you tell somebody that you want them to do something, or else you're going to punch them in the nose, they don't do it, and you're bigger than them, and you punch them in the nose, they typically go do it. If it didn't work, bullies wouldn't exist in the first place. So I think, again, it gets back to this: what should it be done? That's the question for somebody else. Will it be done? It will absolutely be done. So that's what I would say with regard to the way the U.S. acts towards the rest of the world.
But if you want to use the bully, one way to avoid a bully is like, if you know where the bully is, try to avoid them if you can, right? Just don't,
Sure. There's a very good movie. There's a very good movie called Syriana. It came out about 20 years ago, and it has George Clooney in it. And it's really based exactly on what we're talking about right here. It's like two Saudi princes were kind of vying for who was going to run the country now that their father was dying. One of them wanted to kind of open it up and get kind of multiple bids and sell oil in different currencies. And the United States went in and supported his brother, and they took out the brother that wanted to sell in other currencies. So, that's unfortunately the way the world works now.
Yeah,
would
but
that
my
happen
point,
in the real world?
I
get your point, Peter. I get your point. They want to get away from the world. They want to get away from.
Just in case somebody watching it doesn't get the point that I'm going to make, it's that, if we've got this bully that's beating up kids in the playground, other people are going to avoid that playground. I don't want to be over there. This bully's going to beat me up. And so my point is, other people are looking at the beating, so to speak, that Russia's taking, and they're saying, hey, I don't want that to happen to me. So they don't want to go in the playground. That's why they want to try to get away from the US dollar. and
Yes.
trading in dollars and all that, because to the extent that they're off the dollar system and they're on some new system, and if their reserve assets are not dollars, let's say they're gold, then they don't have to worry about the sanctions. They're not going to have any impact. So people want to be in a position where they can't be sanctioned. The reason that everybody is so vulnerable to sanctions is because they've got themselves so deeply entrenched in the dollar. So they got to get out. That's my point. What America should be doing, because I mean, if our leaders recognized how important it was to continuing this, that the world continue to keep the dollar as the reserve currency, they should do nothing to shake that, to rattle that, to bite the hands that are feeding us. The last thing we should do, we should say it's sacrosanct. No matter what you do wrong, we're not going to sanction you with the dollar or SWIFT. We'll have to think of something else. We can do tariffs or we could do whatever, but no, that's off limits. That's what we should be doing, right? To create that precedent. But we're not doing that. We're doing everything we can to unravel it, and it's because I don't think our leaders really are smart enough to understand what's at stake here and what they're doing.
Well, there's two. So you guys are kind of agreeing, but offering two different strategies. Peter's saying if they understood it, they would try to be the best customers possible. Brent is saying they actually do understand it, and they'll just use military might. They'll do CIA-backed coups to make sure that the dollar stays as its hegemony. But Brent, what do you think about the feasibility of that? Like, so you're kind of arguing the leaders understand the importance of it, but can they maintain it?
So in my opinion, I think both the U.S. at a very high level, maybe not individual Congress people in general, but I think the deep state, or however you want to describe kind of the Washington machine, understands the importance of the dollar. And I think that they understand that keeping the dollar as a global reserve currency is kind of key to the United States staying as the global power. And so I think that, while they would like it to be where everybody just happily goes along with what they say, and they would like everybody to like them, I think at the end of the day, if they don't really care whether anybody likes them as long as they play along, right? And to Peter's point, I completely agree with him that the people don't like the bully. Nobody likes the bully. Maybe they cozy up to the bully more for protection than because they like them. But it's, again, there's this kind of sort of romantic notion that all you have to do is walk up and punch the bully in the nose and the bully goes away. And once in a while that does happen. But usually what happens is when you attack the bully beats you up and you go away bleeding. I mean, that's typically what happens. So the idea that the rest of the world wants to get away from the dollar, completely agree. The idea that they can do so and do so successfully, and that in that interim period, the dollar won't go a lot higher and hurt them even more, I think is very low probability.
And Brent, real quick, I did want to ask you about the petrodollar. Some people argue that it's not really so important anymore. Some people think that it's literally the linchpin that's holding it all together. What do you think on that?
Well, I have two thoughts on it. One, it's not as important as it's still very important. So I'm not going to pretend it's not. It's very important. But because of all the US dollar debt that the rest of the world has issued, it's not as important as it used to be, because there's another driver that didn't exist 30 or 40 years ago for dollar demand that existed, that didn't exist then, but does exist now. I don't think that the U.S. would mind if a little bit of trade is done in other currencies. They certainly don't want it to become a huge trend. But at the end of the day, if Saudi Arabia continues to price the dollar in the oil in dollars, but trades a little bit with some countries on the margins in another currency, but it's still priced in dollars, I think that's fine. But I think if Saudi Arabia tried to completely change the structure and no longer price oil in dollars and price it, and do equal trade in yuan or whatever it is, I think that there would be huge geopolitical pushback. I think it would lead to some kind of not only an economic crisis, but probably a military crisis. And in that environment, I think the dollar goes a lot higher.
Peter, I've heard you talk about in your podcast before that you view the massive treasury holdings of the Chinese as a potential economic weapon, where if they were to dump it on the open market, they tank the price of treasuries, interest rates skyrocket. Do you think that's something they might pull in sort of a, as tensions rise over Taiwan, and if we tried sanctions, would they try something like that?
Well, I mean, I think they're already, trying to diminish the size of their treasury holdings. I mean, they're not nearly as big a buyer as they were. But I mean, I think it's a huge liability for the Chinese to hold so much of our debt. And I also think that the more of our debt they have, not only is it that we're less likely to repay them, because we're more likely to inflate, but it's also possible that we'll just tell the Chinese, we're not going to pay your treasuries. That's how we're going to sanction you, right? The treasuries that you own are no good, right? Everybody else's treasuries are okay, but we're just going to cancel the ones that you own, right? That's part of a sanction or something like that. So, because politically, it's a lot easier for the U.S. government to default on the obligations to pay China than to default on the obligations to make Social Security payments, because the Chinese don't vote in our elections, whereas people who are collecting Social Security do. So if the government has to choose, hey, who do we pay, Social Security or the Chinese? Well, the Chinese are going to lose that. And they have to recognize that they are in a very vulnerable position, and they can't sue us. I mean, what are they going to do? There's no way. We just tell them, hey, this is the deal. You're not getting, your money. So they're going to have to stop. But I do think that if they started dumping, would that immediately crash the dollar in the bond market? I mean, obviously the Fed would step up and start buying. So, I mean, maybe it would crash it. It certainly would diminish the value of treasuries. It'd go down, rates would go up, the dollar would go down. I don't know if it would immediately crash, but it may be the beginning of a ultimate collapse, because I think if the Chinese do that, well, they're not going to be the only ones that do that. And, as we lose these foreign buyers, I mean, Brent mentioned that there have been a lot of foreign buyers who have showed up at those treasury auctions. What happens if they stop showing up? I mean, it's certainly not in their interest to show up, I don't think, but especially when they realize that inflation is going to be much higher in the United States. We're never going to have positive rates of interest. So treasuries are never going to be a winning investment for people. They're just going to have to accept the losses. Well, why should they? Why should people accept losing money in treasuries? Why buy them? Just don't. And so then, when the Federal Reserve is the only buyer of treasuries, that's massive inflation, because where do they get the money? And, if the Fed becomes the only buyer of treasuries, no one's going to want to buy muni bonds. No one's going to want to buy corporate bonds, not at yields that anybody can afford. So that, those bonds are going to start to crash, rates are going to start to rise, and the Fed's probably going to start monetizing all that debt. And then it would collapse the currency. So certainly, whether the Chinese can collapse the dollar on their own, or whether, they just get the process going and it happens months later, or, but it would happen. I mean, we depend on the rest of the world. Interesting enough, the Japanese don't need any foreign buyers. I mean, they have the Bank of Japan, and it's a pretty screwed up situation, but they've been going for a long time, even before the Bank of Japan was so aggressive. The world wasn't buying Japanese bonds. It was the Japanese that were buying the bonds, because the Japanese had a lot of savings. The reason that foreigners buy treasuries is because Americans don't have the savings. At one time we did. A lot of people want to talk about how, now we have the most debt to GDP ever, except, or, comparable to at the end of the Second World War. But people forget that when the Second World War ended, we started paying off that debt. I mean, the debt collapsed, to down to maybe from 120% of GDP, whatever it was, down to a low in the 30s. I forget when it bottomed out. Was it, the 80s or whenever it bottomed out at 30-something% of GDP. But all that debt was owed to Americans. It was Americans who were buying all those war bonds. I mean, the Japanese weren't buying them. We were fighting the Japanese. We American citizens loaned all that money to the U.S. government. And then when the war was over, we dramatically brought down the debt. We have no chance of bringing down the debt. It's going to keep on growing from 120, 130% of GDP, where it is now, 150%, 200%, 250. It's just going to keep on going until it implodes, because there is no way to reduce it. I mean, it's already so big that that's impossible. I mean, they're having that problem in Japan. with their debt. But I think that the Japanese probably are going to be better positioned to deal with their bond crisis. I mean, they're going to have one, or a yen crisis. It's not like they're going to escape the consequences of what they've done. But I think there's going to be even greater consequences in the United States for the even greater sins that we've committed.
Now, as far as treasuries, I think Peter's right. If the Chinese came out and they sold all the treasuries, just the headline of it, yields would spike, there'd be market chaos. It would probably hurt the U.S. initially, but to also his point, I think very quickly the Fed would come out and they'd buy. It's like I think they own 1.3 trillion. So you think back to COVID, what did the Fed buy? $5 trillion worth of treasuries or whatever it was. 1.3. What's might cause a couple weeks of chaos, but I think they'd probably buy that. But then what would happen then is I think, and I'll give an analogy, is that I think even though that would inflict a short-term pain on the United States, I think it would inflict medium-term pain on themselves, on China themselves. And the reason I say that is because it's very easy to say, we just won't use dollars anymore. But the problem is actually doing it. And the example I'll give is, over the last 10 years, and especially over the last 2 or 3 years, there's been this big push to move towards green energy, and governments mandated that industries decarbonize and, get away from the old fossil fuels. And they put regulations in against things like coal and, dirty energy. And the idea is that, we're just going to go to this new green energy and everything's going to be great. But then what happened was there was a crisis, right? And there was the COVID crisis, and then with Ukraine, and all of a sudden, because those new systems weren't up and running fully, they needed that old traditional energy to run. And so gold or oil went up through the roof, natural gas went through the roof. And it's kind of the same thing with currency. I mean, there's a lot of plans to de-dollarize, and there's a lot of plans to put new systems in place to transition from the old system to the new system, but they're just not up and running yet. And if we get into a crisis before they're up and running, when that happens, I think, the dollar goes a lot higher. So the reason they still show up at treasury auctions and the reason they still hold dollars is because until that new green energy currency system is up and running, they still need oil, they still need dollars, they still need, treasuries. And so that's how I think that would play out.
Yeah. Well, first of all, holding U.S. treasuries and using dollars are two very different things. I mean, there's nothing that stops the Chinese from getting rid of their treasuries, but transacting in dollars. They just don't want to hold on to them. They don't want to buy treasuries with them. They want to just use them to buy stuff, buy real things instead of treasuries. And of course, that is very inflationary here in the United States, because if the Chinese want to buy real stuff with their dollars instead of treasuries, it's treasury prices that will fall, and the price of everything that they are buying, that's going to go up. And of course, a lot of this stuff is stuff that Americans want to buy. So we'll start to see much higher prices. But my point I'm making is, yes, even if the Federal Reserve can quickly monetize all the debt that the Chinese no longer own, and we take the hit to inflation, because if you print all that money, prices are going to go up and the dollar is going to go down. But it's more of the message that it sends going forward. Well, China's not there anymore. China's not going to be buying any more treasuries. And, what are they going to buy? What are the Chinese going to buy with all the dollars that they get when they unload their treasuries? My guess would be they'd buy a lot of gold, and so that would push up the price of gold, and that hurts the dollar because, gold is kind of a barometer of confidence in the dollar. And you start to really see gold going up, that makes people question the dollar and think, well, maybe we should have gold instead of the dollar. And, you mentioned even before we had this conversation that the Biden administration is thinking of imposing more sanctions on Americans. And they say, it's sanctioned. They want to say it's sanctioned China and say Americans can't invest in China. The sanctions aren't on China. The sanctions are on Americans. They're taking away the freedom of Americans to invest their money where they want to invest. And the worst thing is when the U.S. government forces an American to divest of an investment he already owns, because then he might end up having to get out at a fire sale price. So all of these actions that the U.S. government might take, they're all against American citizens. They're never against China. They're all undermining the individual liberties and freedoms of Americans, and they make America poor. They don't affect the Chinese. Now, some other investors might get a break because now they get to buy the assets that we have to sell at a fire sale price. But if the Biden administration actually says, we're not going to let Americans invest in Chinese companies, well, that might be the first salvo in that war. How would I respond if I was China? Oh, we're not going to invest in your bonds, because that's what they invest in now. They buy our bonds. Okay, Americans, you can't buy Chinese businesses. Fine, we're not lending you any more money. See how you like that?
Yeah, I think a takeaway from this has all kind of been, it sounds like it'd be a disaster for all parties involved. So I hope this doesn't happen. But I appreciate both of you coming on. Brent, did you have like a closing statement you wanted to make on Peter's comments there?
No, I mean, it's, again, to your point and what we talked about initially, I don't think anybody wins in a war, right? And unfortunately, it looks like this is where we're headed. I don't think it's a positive for anyone. I just believe that due to a number of institutionalized effects and the number of advantages that the United States has over the rest of the world, that on a relative basis, they come out of this on a relatively better place.
Fair enough. Well, thank you both, gentlemen, for joining Epoch Times today, and hopefully we get another debate soon.
Okay, take care.
All right. Thanks for the invite.